Let's talk about some information and charts on Aave for BraveNewCoin. So Aave is a lending and borrowing protocol where you can connect to your MetaMask or hardware wallet and participate in the lending and borrowing markets in a decentralized fashion. They have quite a limited number of markets depending on which chain you're on: Polygon, Avalanche. Aave version 2 has a significantly larger list of potential markets here to participate in, a growing list, variable APYs, APRs, deposit lending. All this is based on supply demand. So if all of the USDC is out on lend, the APYs increase. As the deposits increase relative to the lend or the borrowed amount, APYs go down. So right now, when things are bullish, when people want to borrow, rates go up, right? That's just how it is. At some point, rates hit an equilibrium relative to expectations of bullish continuation or bearish continuation, and people start paying back those loans, rates go down. So rates as high as they are right now on stablecoins shows how bullish the market is, how much pent-up bullish demand there is, in my opinion, because rates are this high and people are still paying those rates. People are eating that borrow APR, APY, whatever, because they assume they can get a better value on speculating with this or trading with this, participating in markets with this. And there are various advantages of, borrowing one thing or the other here. But as a lender, as someone depositing, stuff like this is incredibly valuable because you can participate in these markets and not have to worry about volatility risk. So let's say even if you don't like crypto, you can appreciate how high these interest rates are relative to legacy finance, savings account at your bank, for example. Are there issues with stablecoins versus your bank? Obviously, yeah, but you got to take some risk if you want to participate in DeFi and crypto and that sort of thing. So the protocol is great. All of the DeFi protocols are great. Anything that still exists, for the most part, has a very valid use case and people are using it to a high degree. I mean, there's 26 billion in TVL here according to Aave, but the issue comes when we're talking about the tokens. What do the tokens do? What is the use case? Why should anybody care? Why do they even matter? That is the problem with DeFi in general. Most of the DeFi coins use their token as an incentive to participate in these markets. Now, the incentive relative to the rate that the market is offering currently is much lower than anything that'll generally make a difference, meaning that the organic borrow rates deposit rates are much higher than the incentive. So the incentive isn't that big of a deal. It's just icing on the cake, right? The incentives play a bigger role when no one is borrowing anything and there's tons of deposit, right, relative. So this is all very much a give and take game as far as what's important, what matters, where are those incentives? Are those incentives higher on Avalanche, for example, which they usually are, higher on non-ETH chains, potentially to get people to use them, potentially based on supply demand. There are all sorts of reasons. Sometimes they use different coins altogether for incentives. It's a wide swath of possibilities here. And they have other markets. They have AMM markets, which I don't think gets used as much. This is, I'm guessing this will eventually get just deprecated or removed, but maybe not. Maybe I'm wrong there. The analysis problem comes in when we're looking at multiple chains, multiple markets. What's important, what's not, where are you going to see growth? What are ETH fees relative to these other chains? It's good for all these protocols to go multi-chain, throw anything at the wall, see what sticks. If ETH fees are high, people would much rather participate in these markets on Aave and Avalanche because you can send smaller deposits and get better net rewards with fees being so low on other chains. So the lending and borrowing stuff looks great. The TVL is number 2 behind Curve. It's ahead of Maker. It's ahead of Comp, Aave that is. And they are TVL all-time high, by the way, across the board. They're participating in lots of markets, staking, Polygon, Avalanche, blah, blah, blah. But even Aave's TVL is at an all-time high here. And if we look a little deeper, borrow volume also near all-time highs, not quite at all-time highs on version 2. It's probably at all-time highs when you're taking everything into account, and not that many liquidations recently. Aave is one of the biggest offenders, I guess you'd say. When liquidations happen, it's usually Aave and comp, not necessarily Maker. And I talked about this a little in the Maker video, but I think one of the simplicities, the beauty of this is that I can just click a few buttons and I'm in. I don't need to look at 10 different vaults, all these lending and borrowing minutia, right? I can just boom, 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 done. I don't have to think about it. It's stupid simple. Anybody can understand, like click, 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 done. For Maker, it protects the lender and borrower more, I think, based on the liquidations we see with Aave and Comp when we do get liquidations. But I also think that means it's more difficult for the average user to understand what's going on there. You have to think about it a little bit. So there's kind of a friction there involved in what do I put where, why, and when versus Aave and Comp, where it's just 10 button clicks or less and I'm in. Aave on Polygon, Aave on Polygon, the TVL flat, declining a little bit, borrow volume flat, liquidations flat. You'll often see TVL rising when incentives are the highest. That's kind of a no-brainer. And when those incentives drop off, the hope is that the TVL stays, the activity stays. And it has to some degree, but it certainly hasn't continued to increase. On Avalanche, the stats, I don't really have much value here, but flat increasing. So it's early for all these stuff. It's early for multi-chain. It's early for things trying to kill ETH as far as fees are concerned. Ideally, once ETH goes proof of stake, fees are a non-factor, or once ETH goes multi-layer, fees are a non-factor. If you look at the borrowing volume across the Maker, Comp, Aave, Aave is number one, accounting for version 1 and version 2 at over 8.3 billion in total borrow volume. So again, the protocol is gangbusters, amazing, right? People can't wait to throw stablecoins at those rates. It's just the token itself. Does this translate into token value? It hasn't. It really hasn't. You can't argue that it has since January, February, March, right? Token's gone nowhere. It's just been sideways, flat nonsense. And perhaps the on-chain stats are more important than TVL, dare I say. I think TVL is kind of a silly metric. It's important to look at and to know. I just don't think it's going to move the needle for price. I think people promote TVL like it's this great thing for projects, and it's great for the protocol. It's meaningless, arguably, for the token value itself. So transaction counts on-chain for Aave have continued to dwindle down to basically all-time lows. No one's moving this thing on-chain. This indicates just a general lack of speculation, really, because what else are you going to use Aave for? Maybe a governance component or something, but average transaction value is rising as transactions are falling. That's what you normally expect to see. And NVT here in the line, inverse metric of economic utility relative to price, spiking to all-time highs. So either NVT is signalless nonsense, or it's telling you this thing's in trouble and better turn around quick because market cap relative to on-chain activity is extremely high. This is just echoing everything else where you're seeing active addresses go to multi-month lows. You're seeing transaction counts go to all-time lows. There's just no on-chain activity relative to market cap here. And looking at MVRV, which I think is a better metric of market cap versus on-chain activity, much like everything in DeFi, there's no signal here whatsoever. You need more data. Ideally with MVRV, you see highs in MVRV matching highs in price, and you're not seeing that here. You're just seeing continuously declining MVRV regardless of price. So there's no backtesting signal to look at there whatsoever. Something else you can look at on the fundamental side of things is the PE ratio, or market cap over annualized revenue ratio. Currently, Aave is way down here at a 4x multiple of market cap relative to annualized revenue. So this is a much more generous valuation than market cap versus on-chain activity. Maybe this is a better signal for fundamentals than TVL, than on-chain activity for these tokens, where you're not going to move these. These aren't coins, right? These aren't currencies like BTC and ETH. These are just tokens that hopefully accrue value. There's no real fundamental reason that I can see to hold them unless you're talking about protocol revenue, which we can look at, but Aave is on the left side of this curve, definitely. Now, if we're talking about protocol revenue, supply side revenue, there is revenue based on the volume on the lending and borrowing markets, right? So ideally, this helps token price because it makes you hold the token, just like Maker is all protocol revenue. But even still, this has not translated into token value over the past, 9 months, 8 months. We'll look at the charts in a second, but you'd have no idea that Uni, for instance, has this supply side revenue just looking at the price chart. So either there's some disconnect between diluted value, tokens in circulation, no speculative potential. I don't know, right? This just isn't lining up the way you'd expect it based on the activity here. And to me, it's a signal that these tokens are kind of in trouble because despite all of this activity, all of this protocol growth and APY generation, there's just no token value accrual, at least recently. Aave has also been put in a bucket of other DeFi indices, including the enzyme stuff I'll talk about at the very end. But I think stuff like this is good for these DeFi tokens. It, at the very least, introduces them to legacy people who know less about DeFi than even I do. But it puts them in the conversation. Uni, Aave, Maker, Comp, the blue chips, if you will, of DeFi get into these indices and people start to take them more seriously who aren't in crypto. So at the very least, it introduces these coins to the masses. Is that enough to move the needle? Doesn't look like it has been, right? Maybe Q4 will be ultra mega uber super bullish, but I don't think that's going to be based on anything fundamentally. That's going to be based on technicals purely because if it was based on fundamentals, it would have already been bullish. Looking at technicals, you'd never know that the fundamentals were so bullish for the protocol. Aave Google Trends worldwide. Aave is a word finish for ghost. It's in some other ghost in the shell or something. But even still, you did see a little uptick here earlier in the year, but that's declined. This is starting to increase again as probably these lending and borrowing APYs are exploding, right? Also, it's getting closer to Halloween, so I wonder if that's why this is increasing as well. That'd be funny if there's a ghost connection to Halloween in Finnish or something. I don't know. Just thinking outside the box here. DeFi crypto, Google Trends down slightly, I guess, from all-time highs, 50%. I think we'll look up yield farming. I usually get some crazy like gardening references, but that's still quite high. People are still yield farming on lots of different chains that aren't ETH, BSC, PancakeSwap, whatever, what have you, Joe. So I think yield farming DeFi is still okay. It's just this does not translate into token value. It just hasn't. I don't know what to tell people. When we look at technicals, this is the 365 MA. This is the multiplier and a midline here in the white. And how this works is it's an oscillator. You want to be buying in the green, selling in the red. And based on backtesting, this thing can cruise above the red zone for quite some time. Currently, it's closer to the green than the red, which tells you if this does turn the corner, this is a really good buy. This is an excellent buying opportunity relative to the MA. The most recent time it got down here, it did not, continue to even the midline. So it's not always a guarantee or a promise. It's just telling you if this looks good on backtesting, yeah, this is a good time to buy. So if this turns the corner and is bullish, I like 900 to 1400 as a target with some crazy 1400 plus target. It almost feels like to me that all of this stuff, specifically lending and borrowing in the DeFi land, is waiting on a regulatory blessing from the US before doing anything. I think everyone's just super afraid to park capital in this stuff with the comments made by the SEC specifically over the past few months. Probably KYC AML concerns coming. There are all sorts of reasons to be hesitant about wanting to speculate on coins like this, especially when you can just take the same amount of money, buy USDC with it, and then park it in the protocol. Like, this does not look bullish. This is not a bullish chart. It hasn't been bullish since January. Smart money's not going to want to touch this, right? There's just no reason to. On the daily EMAs, 5,200, VPVR volume, and RSI, the EMAs have crisscrossed a couple times here. It's still in the volume range. It's just been a massive range, right? You can only say it so many different ways, but since February, this has done nothing. It's had opportunities, it's had potential, but it's translated into nothing. RSI is flat. So really this needs to get above 450 to really probably do anything. Until then, it's just very likely going to range between 200 and 425 until it goes above or below those levels. There's just nothing here. On the cloud, it wants it back above 330 plus, 320 plus, in order to tell you that you expect bullish continuation. Right now, it's just more bearish than anything below the cloud there. And Aave BTC looks quite awful, which is good if you're looking to buy, because obviously you want to buy low and sell high. So the lower this goes, the better relative to BTC. If BTC does get crazy bullish beyond all-time high this quarter, I can very likely see a late quarter rotation into alts after BTC and ETH move. We see this time and time again, year after year. You even see all-time highs bleed into early Q1 for a lot of these alts and DeFi things. So this is a falling wedge, I guess you'd call it, a reaper, sigh, a sickle, whatever you want to call it. I like 003.2 as a buy. Until then, just let it die. Let it just droop down to nothingness. Hopefully you get some sort of div here to develop. RSI is already in the dumpster, and just let it go, right? Just let it go, let it go. And against ETH, it's just been bearish since February, right? It hasn't been neutral, it's been bearish since February. And it breached the 50, breached the 200, death cross, and now it can't even get back above the 50. You don't even have a bull div here yet. It is the opposite of bullish. Below VPVR, there is no yearly pivot anywhere near here to save it. This is another chart. You just want to let it have its temper tantrum, wait for mega lows, wait for volume capitulation, wait for multi-week bull div, and then step in and probably rotate into this relative to ETH. So protocol, love it. Fundamentals of the coin look abysmal. Technicals for the USD pair look neutral. BTC and ETH pairs look extremely bearish and very likely to get rotated into late in the quarter, assuming there's no regulatory actions that get ugly for all of DeFi. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio I trade for TechMe Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation. You can see all the vaults here on Aave, Comp, and Yearn, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.